Okay, everybody, welcome to this evening's AUDCAD webinar, live forex market review. Sorry for the delay. A few internet issues at my place. So tonight is live forex market review. Let's get straight into it. If you're on our YouTube live stream, I can join us. I'll link in the chat that I've given you. All right, so please read through the risk disclaimer. Any questions to the chat or the question box? Hello there, Azu. Hopefully I'm coming through loud and clear. I have to hotspot my phone this evening. All right, let's move along. Now, if you don't know me, my name is Duncan Cooper. I'm a senior market strategist and trading mentor here at Audjpy Securities. And I'm a full-time trader. Been trading the forex market now for more than 15 years, been mentoring clients for more than 10. If you want to contact me, my email is there on screen, duncan.cooper@acy.com. Through the week, you can connect with me on our website, acy.com. Go to the market news tab for my analysis, our YouTube channel, Audjpy Securities Australia. And if you want to connect with me personally on Twitter or LinkedIn, my handles are there. As well, through the week, our ACY Telegram channel. For any access, just contact Nathan.bray. Access to my, again, just contact Nathan. If you've got any questions about setting a demo account up, or a live account, here's the go-to man. I'll put his details in the chat now. All right, let's get into it. A bit late today. Just want to have a quick look at the news items coming out for the day. Today's Thursday 27th, so 10:30 p.m. got the US Advanced GPQQ unemployment claims. That's this area here. And then tomorrow, a risk event will be the Japanese outlook report, monetary policy statement. And they never give a time, but it's usually in the afternoon. And press conference. And then later in the evening, 10:30 p.m. for US, Canada. We've got Canada GDP, core PC price index, and employment cost index for the US. Okay. So currently we've got the US Advanced GDP coming out at 10:30. So whether you want to take a position before then, you'll have to make that mind up yourself. But that's the risk event coming up at the moment. All right, so with that in mind, let's get to the charts now. Some pairs are moving up, some pairs are moving down. We don't have this fully correlated movement at the moment with the US dollar. For the likes of the euro dollar and pound dollar been moving up, but dollar CAD's been moving up. Aussie dollar, New Zealand dollar been moving down. There's not this true correlation going on. So dollar index, it's tried to move below this weekly level of support yesterday. It's been trying to move through it all week, but clearly buyers are positioning, supporting that area at the moment. You can see we've been below it. I thought, not yesterday, but the day before on Tuesday, we were reversed up from that level and we were going to continue up, but no, we just then had a day down. We did reject the level, so it's not structurally an uptrend yet. It is still holding on support though. You know, if we can break above this, you know, can we get a trend line break? Can we break above this swing top? Then we might start to see some US dollar strength, but at the moment it's mixed, one day up, one day down. It's just sitting on support. It would be great if it just declared one way or the other which way it wants to move. So whilst that's declaring where it wants to go up or down, S&P 500 is definitely holding that weekly area of resistance up here. It's having a week down. It's already put in a lower bottom now. We might see a rally up to put in a lower top. And if you like to trade the index, you know, you could be looking for, there is the idea of a head and shoulder pattern there, left shoulder to the left, head, you could be watching the 79% retracement area of that fib range for the possibility of a little head and shoulder pattern maybe forming there, or a move down. All right, so let's just have a look at, we'll go to the Euros first. It's a bit consolidated at the moment. When we finished the webinar last night, we were here, and then something pushed it well up as we were getting into New York, but it couldn't hold the gain. but it is sitting above at the moment. Starting to sit above this top for the moment. And whilst I did think we were getting into reversal territory after the finish of Tuesday, Wednesday then just totally went back up. It just held on day support there. So it is holding its uptrend just. We are, as I've been discussing, we're at the 79% retracement level here of last year's high to low. So this is extreme high prices at the moment. You know, you have to work out whether you want to be a buyer at high prices. I'm not really seeing anything to suggest at the moment that there's a massive trigger to sell. And, you know, if you're not seeing anything, you don't have to do anything, but it is worth understanding its position in the market at the moment. And there's a little bit of a bid ultimately still to this in this high priced area. So at the moment, 109.73 is the area of support. Whilst we're above 110.33, that would be the level to potentially watch for a move below. And of course, the high up here at 110.72 is held. It false broke it yesterday. So depending on what your philosophy is, whether you think this is extremely high, you want to trade down. If you want to trade down, you know, looking back up at that 110.72 to 10.75 area up there would be the area to watch for potential failure. It's failed fractionally short once this week, rejected it the next day. So clearly the sellers are watching up there. So that would be your sell area up there. And, you know, we could stay range bound in this mixed environment at the moment on some of these pairs, and this could just trade down to support, and this could be the area to be a buyer at. I thought we were going to follow through and down, but clearly we haven't. So the market's proving to you what the levels are. So your sell level was up here at 10.72 to 75. And your buy level's down here at the daily support top, now at 109.73 area. So trade it like it's in a range at the moment. It has got that little bit of a bid to it. So you have to work out whether you want to be a seller at the top here or you just want to wait for a pullback to be a buyer. But you're at the top of the move, most immediate intraday move, you're at the top of the move there. So it's less likely to offer you the best buy opportunity. But if you're looking for a buy opportunity and you must do something, you know, 110.33 in the central pivot point at the moment could well be offering the support line for the day. We haven't been down there yet, but we've obviously got the US news coming out later. And whilst we haven't visited this area yet, that would probably be the sell area there. And, you know, we came up, hit the sellers and came down. You could actually look at that range to see where the 79% fib is, which is up at 110.81. So depending on what the news does, the news could spike down to here. You may see an opportunity to trade back up. Price could spike it up to this area, up or to the higher 79% level. And then you might see an opportunity to trade down. You can see at the moment, those two areas of support or resistance, price is in the middle. So it's not very user-friendly in the middle of the boundaries of what price is potentially respecting. So you always have to work out, is it in the best area for me to trade right now? I don't think it is. You want to see the outer boundaries met one side or the other there. Okay. Euro yen, I put this out on Telegram today. Possibility, you know, these are weekly. Oh, well, that's a monthly high, but these are weekly highs as well. Weekly high, weekly low. And we're kind of, let me just get rid of that fib for the moment. We're trapped between those two price points for the week. Now, this is a significant price point because it's last year's high. And whilst we've traded above last year's high just, we might want to hold here and maybe create a major double top. So I don't know if up here is the most wisest thing to do, to be a buyer up there. You know, do you want to buy at the highest price of last year? Because of course, if you did that last year, you were totally wrong. So I wouldn't be buying up there. But if you see a reversal setup pattern, that would probably be the go at the moment. From a buyer's perspective, you want to see a revisit of 146.72 down here, and then can that hold? And maybe you could look for a trade setup to trade up. But what I noticed is we have moved down to a lower point here on the 4 hour. This could be a left shoulder. This could be a head. And we're kind of sitting at that right shoulder at the moment. On Telegram, I was just putting out that I was going to be watching up here at 148. We've been fractionally short of 148 today. Been up to 147.97, but you know, can we get up to that 148.12, 79% level just there? So when the news comes out, can we just maybe get up to that high level? Can you see a setup to sell, then to trade down? We do have the Bank of Japan information coming out tomorrow, so might be difficult to hold a trade, but that looks like a nice area to watch for a pattern to form. It might not get up to there. It may just be just holding above this left shoulder at the moment. So are we seeing some form of head and shoulder pattern forming here, or a 79% retracement after failing at last year's high? If you're going to trade, then potentially you're going to have to hold it through the Bodge announcement tomorrow. Can it come up to the 79 level? Stop above the high. Trade down. All right, that's what I'm looking at there. Euro pound, it's right at the resistance level at the moment, where it's been holding for the last couple of weeks. So for our chart, we rejected yesterday. We've already rejected today on the last 4 hour candle. Are we holding here to trade back down the range? You have to make a decision. Do you want to, if you like this pair, do you want to trade it? That'll be a 79% retracement, that swing at the moment, close to. So we've already hit the 79% level of that smaller range. And there's this bigger range here. We traded at 79% of the bigger range twice. So could have already sold there yesterday and made some profits. You could have sold there already today and be at break even if you really wanted to. All right, so clearly that 79% level up there at the moment is being watched. So you just need to make a decision. Do you want to trade at that resistance area, trade down? That's the level that keeps failing out at the moment. All right. And if it does hold there, you know, the bottom of the range is back down here at 87.54 day support through here. So that would offer good risk reward. So then at the top there to trade down to the bottom, if it worked, that would give you great risk reward. All right, so you can work out whether you like that or not. All right, let's get into the pound crosses, pound dollar. Now, I put this out on Telegram. This is getting rather range bound. You know, the day chart, we are starting to hold above this double top area it was, but you can see for the last 2 or 3 weeks here, it's starting to go sideways. Ever so slight bid to it, but hopefully you can see, let's just get rid of that double top area. That is at 124.48. You can make a mental note. But here's the boundaries. 2-day resistance areas at the top, 2-day support areas at the bottom. On the 4 hour chart here, we've been down to a lower bottom, swung up to a higher top, swung down to a lower bottom, swung up to a higher top. So it is mixed. I was looking at that 79% level, which we've tested twice now. We might, that would be my area to watch, that 79% level, 125.00 up to 125.04. Clearly that's being watched. That's the outskirts of the upside boundaries up here. We're nowhere near the sell side. We're nowhere near the buy support boundary. We're a lot closer to the sell side resistance area at the moment. So my focus would be to see if price can get up to the sell side. And then can you see the opportunity? Now, what we might be kind of seeing, might show you better on the 1 hour chart. It's by no means perfect, but let's say that's left shoulder. All right, now, of course, we haven't come down to a lower bottom, but I often don't care. I just look to see what's going to happen opposite that, because this is obviously a false break at that top there. So up here, 125.00 up to 125.04, that top there is probably at 125.07. So 125.00 to 125.07 there would be my area to watch for a short if price could get itself up there today. It is notably holding below last week's high here at the moment. So anything above last week's high is very heavy going for the pair. So is it topping out? Or will it give you another run up there? The run up what we had at the start of New York time area wasn't sustainable by the market. So another run up may well not be sustainable, and you might see a nice opportunity up there to trade down. Whether that can trade down for you to come down to the bottom of the range, who knows? There's lots of 4-hour support lows to the left here that have been forming in this mixed trend. But, you know, we're closer to the sell side of that range than the buy side. So I think the sell side is the way to try to look at it if you can see price get up to the higher end of the range. All right, pound yen. Been using this range a little bit short of the 79% area, 168.54. That coincides with these tops. There's a very good resistance area up there. Day chart, we've put in a little minor double top. It is range bound here, and it's sitting in the middle of a range. If you move it to the 4-hour chart here. There's the bottom of the range. And that would be your top of your range. And price is in the middle, you know. This could stay range bound for the next week if it wants to. Of course, the Bank of Japan tomorrow may well sort out that range bound environment. But at the moment, you know, seeing as we've bounced down here, I would be looking potentially up here for a short. Watching from the 79% level up to the high. It's not obviously not up there, and it might not get up there, but it's in the middle of a range. Now the 50% point is almost where price is. And when it's in the middle, it can go either way. So you want to either be a seller down from the top, or you watch the bottom to be support to trade back up. All right, in the middle of the range, it's just, for me personally, it's just no man's land. So got to pick your battle. Waiting for price to be in a good area there on pound yen. All right, Aussie yen. Day chart. Weekly chart here. I've been discussing this 62% retracement. CPI data this week nicely started to push it back down towards where support is. Monthly support low here, 87.01. Monthly support high down over here as well, 86.24. We traded at both those levels last month. As you see, AUDCAD, we'll have a look at that later. That hit that level. I was watching it before it hit that level that we discussed the other day. Now, so my bias is here to the downside if you're not already positioned. I did manage to get positioned higher up. So I'm waiting to see if this can move down. Structurally, if you want to be to the letter of the law by the day chart, the weekly trend is down, but the daily here is still in an uptrend in terms of higher bottom, higher top. But I think that's potentially a failure here. So I wouldn't get too excited about thinking this is a higher bottom. And I don't know if we have actually had a day up today. It's maybe equal highs from yesterday to today. If you want to get short this pair, you don't want to get too close to where support is as you're shorting it. Okay, you want to look for the opportunity to sell a rally if you can. In terms of this week's move, that's the high of the week. There, I will just be monitoring that range. Can it come up? Last week's low there would be a good area. 79% levels at 89.57. Can it come up to last week's low? Last week's low is at 89.39. 79% at 89.57. So that area there. Now, whether or not price can get up there, I don't know. But you have to look at when price is, where is it within the range, where support and resistance, and we're getting at lower levels at the moment. You want to try to be selling at a higher price. So the higher opportunity, higher probability area is up here, not down where price is at the moment. But looking at your 15-minute chart, it's structurally looking like it's wanting to move back down. This could well be the high of the day. So, I mean, you could be trading here, stop above the high of the day to trade down towards 88. This is all, it's already put a lower top in there. So it's already intraday on the 15-minute there, starting to show a bit of a downtrend. So it may have already failed for the high of the day. My swing point entry is there that I teach. So that would be a sell below there, stop above the high. But as I said, my preferred option on this pair at the moment would be up at a higher level, but you might not want to wait for a higher level. You might just be wanting a trigger to sell, and that would be a trigger to sell intraday on the 15-minute chart. That's yesterday's high. So obviously intraday at the moment, we're not wanting to move above the high yesterday. So now we may well be moving down to the lower yesterday, coming down to retest 88. All right, it's already showed you a trend line break. Showed you a trend line break. It's probably going to offer a swing point break anytime soon. Aussie dollar, it's possibly put its high in for the day already. 66.29, if you've got your levels in, is this weekly low here that we've maybe starting to break down below. We tried to break below, but then was holding above. We're maybe starting to want to maybe commit down. We've had 2 closes below this week already. Are we going to get a third day closing below? Moving back up at the moment is holding as resistance. So if you get these levels on your chart, obviously when I'm doing my analysis, I don't know where price is going to be, but having that on your chart, you could have already you could have looked to trade at 66.29, close to. Be risk-free by now. And it's a bit difficult to draw a trend line in, but you know, that doesn't really work, but that's the way you kind of draw it. But we are seeing swing point breaks. 2 swing point breaks here. You could have been selling on the break of those swing points, stop above this high here, looking to trade down to a retest of 66, and can we move down and below 66? You know, over the next week, we could be moving down to 65, especially if 66.29 can hold. When the news comes out, price may well come back up to retest that 66.29 level. Clearly over the last 24 hours, see how we try to move above, back below. Try to move above. We couldn't get up above yesterday's high, back below. So clearly the sellers are there. So that's where you really want to look to trade. You know, today, once this started to move back below, and these 3 candles here, 4 candles there was testing that level, you could just sell there with a stop 20 pips above, or put your stop above yesterday's high. As long as it doesn't trade above yesterday's high, you're right, aren't you? Now you could be at break even, waiting to see if it's going to have a down day all day long. All right, but right now, you know, that was obviously the area to watch today. So it might revisit. All right, we covered the euro crosses, we covered the pound crosses, New Zealand yen. This is another, and I've just said on the Aussie dollar, we closed 2 days below weekly support. We retested it intraday today and failed. New Zealand yen, get the levels in. There's your weekly low. day chart. There's the weekly low. Today we've had a day up, but the weekly low from over there is your resistance level. You can see we're below it right now. Price, now that it's moved below it, it's starting to be resistance. If that continues to hold, we're probably moving down to the next level of weekly supports. Next level of weekly support is this level here at 8103. All right. So look on the 15. So we've hit that once, twice, 3 times. Might come back up. If you like that level, this may come back up for another hit. Offer you the opportunity to trade at that level. Clearly today, the market's decided that the weekly, what was support, is shifting to resistance there at the moment. And I did say on Tuesday, we've been in a long-term consolidation on this pair. If this can break to the downside, we may well see a long-term move. So trying to position yourself on that pair would be maybe a good idea. The only downside at the moment is tomorrow with the bodge. So it is worth noting where the high level is, because if we spike up tomorrow, we have been holding at 83.53 to 83.86. You can see how the market's been respecting that area. Discussed that area last week to be a level to trade down from. Can't get back there now, but it might get back there tomorrow on a spike up. So it's worth watching that level. If you don't want to trade until after the bodge announcement, that's certainly a level to watch up there. 83.53 to 83.86. All right. New Zealand dollar. All right, we are having a day up today, but notably, get these ranges. That was last week's range, and I put this out on Telegram. I said, watch the 62 to 79% level and the broken level of weekly supports. Both the Aussie dollar and the New Zealand dollar broken below weekly support now and holding below. So we've got to the 62 level. What is it doing after the next drop? It's a pip short of the 62 level. Is it putting in its next lower top to move down? You could be up here selling at the 62, stop above the high, waiting for the next potential movement down. Okay. If you did that early in the week, that would have been profitable for you. So trading, it's not about having a million strategies. It's about doing something repetitive all the time. If you had that as a repetitive trading approach, it would have worked across the weekly range, which I posted earlier in the week. Sell at 62. Stop above the high. Price is traded down. And now it's trading up and presenting you with the possibility of the same setup. The first one would have paid you. Don't know whether the second one's going to pay you, but it doesn't matter whether it does or it doesn't. You have to just keep having a repetitive approach to chipping away at the market long term to take money out of the market. All right. Now, you don't have to be trading at 62. You could be targeting 79 for your entry level, stop above the high. That offers you better risk reward. But of course, if it doesn't get up to the 79 and only stops at 62, you won't be in. All right. So you have to work out what kind of approach you want. So maybe we're just getting a continuation pattern there. Hasn't quite hit the 62 yet. It may well offer, it may have not finished its upward move today. It may come up to the 62. Might come up to 79. So it's just in retracement mode of the drop we've been having this week. So watch for whatever setup you have, but maybe you see your setup starting to form at 62 or the 79. Those would be two good levels to watch. 61.57, 61.70 there. All right. New Zealand, dollar Canadian next. All right, that's what I painted it on Tuesday. Tuesday had a very very good day up. Hasn't had a pullback. This hasn't had a pullback now in the best part of 1, 2, 3, 4, 5, 6, 7, 8, 9 days. All right, it's due a pullback. So I'm not going to look to try and buy at such a high level. Clearly that day chart trend now is up, and the higher time frame of weekly trend there is clearly up. You just want to look for a pullback. All right. So get rid of that line. Just watching to see if we can pull back now to day support that we moved above to offer an opportunity to maybe trade to the upside. All right. Dollar franc. Possibility of a reversal down here on dollar franc. It's a bit difficult. This has been in an extreme downtrend. I get rid of some of these lines at the moment. But if the dollar index is putting in a bottom, this looks like it's putting in a bottom. We go to the monthly chart here. You know, I'm just going to roughly put in a level of resistance up here so we can see where the range is. All right, just a rough area. Very range bound for a good maybe 10 years here. And we're at the lower end of the range. So that's why I've been saying dollar franc, we're at low prices on dollar franc from what it's been doing over the last 10 years. So there's definitely the possibility that we are going to get support. We've been trying to move below this monthly level of support here at 92.26. And we're pretty much trading at 89.26. And we're pretty much trading right at that level right now. Lower level, if we can continue down into 87.57, you know, we could get down to that level and hold. But, you know, if this is a long-term 10-year range, well, you want to be buying at the low end, selling at the high end. You know, the more that you're still selling down here, the closer you get into being wrong, and the market's going to bottom. All right, so weekly is down, just following that monthly move down. But that's that monthly low there. You can see we're positive for the week. We might be, you know, there is a weekly low there too. We're holding at 88.71. So we might be putting in a day chart double bottom there. And, you know, breaking above those 3 candles could be a trigger to get long. Stop below the final low there to see whether this is going to be the final bottom to have a long-term move up. Now you could wait for the day chart structure to give you a clear higher top, higher bottom. But if you wait for that to come around and it does happen, you're going to give away some pips. So this is where you could possibly maximize risk to reward by getting in early. Just going to put some lines back in. That's weekly resistance up there. That's daily resistance there. So it's just at the monthly level. So as we're not above the monthly level, you'd have to still say, moving to the 4-hour chart, you'd have to still say that could still be resistance. I did say on Tuesday, watch for a move back up to that level to hold, to move down. And lo and behold, that's what it did. So we could actually hold here to move back down. But from a 4-hour picture here, we are actually above that little top there. You know, it'd be nice if price could be favorable. It moves above. So it would trade above those 3 highs that's been holding there from a day chart perspective, and then sits on that top. So we actually get above those highs of the last 3 days. Then we pull back to 89.26 for support on your 4-hour chart to trade up. All right. Just buying right now, you're potentially buying into resistance. So you want to see that flip for that to be support. All right. Now, if we see that over the next couple of trading days, this could be, you know, a long-term low area for the dollar franc potentially. We're definitely at low levels historically over the last 10 years. All right. So just keep watching. Anybody that took my webinar on liquidity, all right, based on the day chart or the 4-hour chart there, there's your sell side liquidity. All right, this is where retail traders have been selling. Stops going off. That push below there is anybody that was a retail trader who was maybe in a bought position have gotten out, and some of them decided, okay, we're trading below there, so we must be moving down, so they're selling. So the only people that are selling down there are retailers. Everybody else, the larger part of the market, are happy to take those buys down. They're happy to take the opposite side of the trade. So if you're selling down there, they're happy to buy down there. So will price be friendly and kind of give you that kind of scenario? Dollar yen. This one, because I don't know, it doesn't move above monthly high that I've showed. Let's just go through it once more. The monthly high that we moved above last year, the big historical high over here, 135.16 from around about 2001. So it's like a 20-year high over there. We did move above it obviously last year, but this year we are struggling to get above such a high area. And this month we haven't actually traded to about 4 pips short. Last month we were above it a little bit. This month we're not. So if we can't get above that level, then you would have to assume that we are going to trade to lower prices, potentially. So key charts, it is mixed. In terms of significant tops and bottoms, that's lower and that's higher. So I've been using that as a level of support at the moment, 133.62 as a reference. That's resistance up there. And we did dip below this week, but we're back above it. So, you know, from a long-term weekly trend perspective, this is mixed. The market's determining 135.16, that monthly resistance level. Can we move above it? Tomorrow's information from the Audjpy may determine that. So at the moment, my major tops and bottoms on the day chart are still showing an uptrend. We're getting some support at 62, but I would just be waiting to see what the Audjpy does tomorrow before trying to trade that. Our level definitely to watch though tomorrow would be at 135.16. We've been 4 pips short over the last couple of weeks. You can see that when we moved below there on the way down, we got a fraction short there to put that top in. So we're actually possibly forming a double top just underneath that monthly line of that 20-year high monthly resistance there. Yeah, are we forming a double top there? So, you know, we could get up very close to 135.16 tomorrow. If it holds once more, then we will wait and see what price does. Okay. All right. Let's get into gold. Here's that triangle pattern that I drew in. It's been false broke to the upside. It's not helping to the moment. We still have this rising line of support, which is getting more acute. But any upside movement, it's getting rejected there on the 4-hour chart. Now that's getting a little bit higher. Kind of getting equal highs across the tops there. Just go to the day chart and have a look. All right, so at the moment, we're obviously holding it this week up. That's the line in the sand. Any price movement above is just getting pushed back to that level. It's 1998. Pretty much we're 1998.33 and we're at 1998. We almost were at 33 when I was talking then, pretty much at the level. All right, everybody, I think my internet dropped out there. Hopefully you're all coming back in. Just somebody let me know that you can hear me okay. Everybody hear me okay? Just somebody raise their hand if they can hear me okay. Yes, great, okay. All right, internet dropped out. It's back, so I will keep going. So as I was saying there, on the day chart, we're holding at the 190.98, and it's rather consolidatory, you know. When you're looking at an instrument to trade, it might be your favorite thing to trade, but you have to ask yourself, is it presenting you with nice price action or not? Gold isn't presenting nice price action here. It just keeps, it's chopping above and chopping below 1998. So until it can offer you clearer trend, I think I would just stay away from that. On the 4-hour chart, there's clear resistance there. And we have a bit of a rising line of supports, but you can see that it's a little bit above 1998, then it gets below. It's above and below, above and below, above and below. So, you know, if you want to trade it, it's selling up at around about 2012, if you can get there, and looking at this rising line of support for your level to be a buyer at. But I would look for something nicer at the moment, so that, you know, sooner or later it's consolidating. From consolidation, we'll break into a trend one way or the other. So that being said, the longer the consolidation lasts, the stronger the trend will be when it breaks. All right, so we'll watch for a clear trend to form. All right, now we've got asked about AuDCAD. So AuDCAD. And you're saying to me that there's an imbalance at 90.30, which we're just been moving up. So when I last discussed this, we were talking about this moving down to the area where it did move down to and got support. So that was well thought out. From a 4-hour chart perspective here, this is in an uptrend now. I know it's just come up to fill that little imbalance, but I just want to look at it on a, you know, there's a potential here for left shoulder. This is like a double inverse head here, right shoulder. All right, this 4-hour chart has turned to an uptrend. So I will be looking at this now, drawing a fib across there, looking for a pullback to a 62 to 79% level. If we drop it to a 1-hour chart, there's probably a little bit of an imbalance in here. There's definitely an imbalance in here. All right, on that candle, there's an imbalance in here. So the best level to look for would be the 79% level. If you're thinking of going long with the structure you see on the 4-hour chart, then, you know, a good level to watch for this to come down to, does it get support down here at the 79% level? It could actually come a bit, you know, it could come back down to that support level. You can see you got 4-hour support, 4-hour support. That was a false break. So in that area there would be a very good level to watch for support. You can see 2 more support lows over here. So in that area for sure would be the area to watch if you're looking for a buy down there. All right, I don't know what you're looking for, but 4-hour structure is now turned back to up. So you're looking theoretically there to buy a dip on that 4-hour chart. That's not perfectly drawn, should be there. All right. Are any more questions? Slightly say my sound is still lagging sometimes. Yeah, I'm having to use my phone because my house internet just decided they want to work as I was logging on. So unfortunately, apologies, but that's the best we've got tonight. So I might call it an end there. Cody, $1 yen. I just covered the dollar yen before. We've got the bodge coming out tomorrow. The main area to watch at the moment is up here at 135.16. There's a possibility of double top forming there. That's a long-term monthly top from 20 years ago. I will be watching tomorrow to see if this can spike up to that area and hold. If it holds there once more, we could be holding at the long-term 20-year top for a decline and that double top to form there. All right, at the moment, it's getting some support on weekly support at 133.62. So if you want to trade intraday at the moment ahead of tomorrow's bodge, support is coming in at 133.62 weekly support. So you should be watching this area to see if it's once more support. You can see intraday on the 15-minute chart twice it's been support today already. So you may well find more support there if it moves back down to that level, okay? And slowly saying euro and pound are breaking through supports. All right, good. I'm actually short the Eurodollar, so I want that to go down. I almost got stopped out yesterday on this run up here, so I got a little bit lucky. So that moving down would be great. Slava, you still short the pound? You wouldn't have enjoyed that move up yesterday. I was thinking about you when it moved up. I was thinking about myself when the Eurodollar was moving up. All right, so we are breaking down. So hopefully maybe we're at the top there on those two pairs. All right. Okay, we're going to call it a day there because my internet probably isn't the best. And I'm doing it on my phone this evening. Just to give you a heads up, we do have next Tuesday coming up. Well, it comes up and on next Tuesday, 7 p.m. is the next webinar. It's live market analysis once more. So we can review to see whether the pound and the Eurodollar are topping out there at the levels. And I'm sure there's lots to come in. So I won't spend too much worrying about that. But next Tuesday at 7 p.m. Sydney time. So if you've got the time, look forward to seeing you then. Other than that, just be very aware about the bodge announcement tomorrow, sometime in the afternoon. Can obviously get very volatile on a yen cross. So it's nice to be in if it moves your way, but it's not nice to be in if it doesn't move your way. So make sure you're managing the risk on your trades, okay? Other than that, have a good rest of the week. Have a great weekend. Look forward to seeing you next week if you have the time. Okay, everybody. Thanks very much. Thanks, everybody.